Hey, it's Ryan from the Option Income Advisor, and today's trade analysis is focused on Zoom Communications. This is a stock that I've gotten a lot of emails about recently, and it's because the stock has fallen off so much. And so the analysis here is really, is this a business that you want to own going forward, right? I think there's been a lot of, overshooting on the upside and overshooting on the downside with some of these stocks that were quote unquote COVID stocks or pandemic stocks. They've really been getting hit hard recently as we kind of, get to a point where, we feel like things are going to go back to normal, which I think every day, even with, these new variants out there, that we feel that we're going to, get back to normal. And so, these stocks that were perceived to have, maybe only benefited from COVID are really getting hit hard. So now you're kind of picking up the pieces and saying, well, which business models actually make sense going forward? And the pandemic was really just a way to accelerate their customer base and things like that on a good, solid core business, right? And so that's where we're at with Zoom. And I think Zoom falls into that category of one of those probably handful of stocks that would have done just well without the pandemic. But the pandemic, again, accelerated the revenues, accelerated the customer base to a point to where it makes it even more attractive now, because as long as they're able to keep that customer base, and even if growth slows, of course we can't keep up pandemic type growth. I mean, it's nonsense. But, again, that's why the stock ran up so high and has come back down. And so now the analysis really is, at this price, do we feel comfortable with the business model going forward? So that's what I'm going to focus on today. But let's look at the chart, because, I think this is probably one of my favorite stocks for 2022, because I think people are still looking at this pre-COVID, post-COVID kind of situation with stocks. And I think that's the wrong way to look at Zoom. I don't think this was only a pandemic type situation. I think, yes, it was accelerated, like I said, but man, there's a really strong core business there, and the technology is what you want going forward. And we'll talk about that in a little bit and kind of where I think the stock could go. But let's take a look at the chart here. And so I pulled this chart kind of all the way back to when it went public. So it went public in May of 2019. And in fact, so this was actually one of the stocks, and we've had a lot of IPOs over the last couple of years. But Zoom was one of those stocks that actually went public, and really, it started to pull back, here at the end of 2019, and got maybe even close to where it was at when it IPO'd. But this was one of those stocks that actually IPO'd, and it was profitable, right? It was profitable out of the gate. So this was pre-pandemic. This company had clearly a profitable business model already, right? Was generating a lot of free cash flow and was very attractive to investors pre-COVID, right? So that's kind of the mindset you got to think about. This has always been an attractive new technology that had nothing to really do with COVID or the pandemic. Again, it was just accelerated. So you can kind of see, and this is about as widespread as you're going to see in a stock, and this is a true COVID stock. I mean, look, this is where kind of COVID started hitting, like right around here, and then you just see this, right? And I mean, you could overlay this with, Moderna or some of those vaccine plays, because this is really, height of fear, and even probably up here was, I think, euphoria with the market and people just wanting to get into these stocks and things like that. But this was probably again, peak euphoria of the market, but also kind of peak of when I think people really started to think, okay, the vaccines are going to work and we're going to move forward from here. We're going to go back to normal. And so that's really when this stock started selling off. And so you see I kind of have this range in here down here. And what I'm trying to think of is, okay, let's get rid of the overshooting nonsense of where the stock went, because clearly up here at $500, is a stock worth 500 or 400? Probably not. But that's just the nature of the stock market, right? It overshoots on the upside and it also overshoots on the downside, right? And so Now we're trying to just pick up the pieces and say, where's a good level to potentially buy this stock? And do we want to own this stock? Is it really the pre-COVID stock that we all thought it was, right? This was a really good business model pre-COVID. So where are we at now? And, where are we going to go going forward? So, clearly, this seems almost like a falling knife at this point, right? And so, you want to get in there at some point, right? You don't want to catch a falling knife, but, you want to make some assessments kind of based on, where they're going and I think really sentiment, right? When you overshoot to the upside and the downside, it's really sentiment. It's not, doesn't have a ton to do with valuation. This was all sentiment. It's not like people looked at it at this price and said, oh, it's crazy overvalued, because they were willing to pay high multiples for things at that point, right? And it was almost like, growth is infinite because, there's so much fear out there. And so now we're looking at a situation where I look back to, when this really started breaking out in May or June of last year. And so this was right around kind of the 175 level, 175, 180 level. That's really when it broke out and really started moving higher with some real velocity there. And so I looked back then and said, well, if that's where the stock was kind of, again, that's really when COVID was really starting to break out, where people didn't realize how quickly this technology would be adopted. That's almost where we're at right now, right? And so put yourself back in that mindset. If you're willing to own it at 175 back then, why wouldn't you own it now? I mean, they've accelerated their sales and customer base so much now, and they've got this user base. And just to put it in perspective, I mean, people think, yes, sales are slowing, right? And they've got different parts of their segment, but I mean, just to build a quick, analysis of their business model, right? It's cloud communication tools, right? And so they've got video, conferencing, voice solutions. They have Zoom phone. I mean, it's really a way for people to, work and engage remotely, right? This was never supposed to be, I think, something where, you would talk to your mom over Zoom because you couldn't see her, right? And, there is an aspect of that to their business model, but I feel like most of those people were probably on the free service anyway. This is really about enterprises and small businesses and ways for a workplace to communicate, right? This is technology you want to be in going forward, right? I mean, if you had to pick technology and a trend, right, is the trend for more people to go into work or less people to go into work? I mean, I think what the pandemic did show us is that people are productive from home. It creates this work-life balance that people like. In fact, people are probably willing to take less pay in order to have that balance of, hey, can I work from home a few days a week and then go into the office a few days a week? So this is not going away, right? This is just a way to efficiently communicate. And I mean, look, Zoom's become a verb. Zoom has become a verb as far as this type of communication goes. I mean, that is a leader in its industry. It's always been profitable. And so now it's really looking back and saying, okay, well, if we can, and this is actually a good segue into, I wanted to look at the chart, and we just quickly high level. And you can see it has a safety rating of 9. So this is kind of a segue into that safety rating. So I wanted to come in there. But you can see, I mean, this thing is traded off. Last Friday it traded off even more. Valuation. Look, it's a high growth stock. There's no question. But valuation is a lot more attractive now than it was at 500, right? And so you always have to make that decision with a high growth stock, especially a technology you want to be in, right? A technology like this that is game changing. You have to make that decision about valuation, and is it ever going to be a deep value stock? Probably not, right? Because it's continuing to grow at a pretty healthy clip. And so, just scrolling down here, so you can see, and I'll keep valuation there too, because I want to talk about that. So you can kind of see, this type of stuff. I mean, this is obviously pure pandemic growth here, but what we've talked about recently with these types of stocks where you've pulled forward earnings is you want to see this kind of level off if you can. As long as it doesn't go like this, that's the type of stock that you want to hold and buy into at these kind of levels, right? If we're just talking about earnings going flat from a ridiculously fast-growing pace, I mean, that's pretty attractive, right? And looking at their business model, they're really more focused on the larger enterprises, right? They have, I think they said it was like 2,500 customers now that pay over $100,000 a year for their services, and that's growing. That grew 100%, last quarter. So that's the focus of their growth, right? Is to get these small business and medium-sized enterprises using their services, right? And so it's not really focused on the individuals anymore. And the individuals are going to be a part of their business, but that's not really the focus of it, right? And that's not really the growth area of this technology. And so yes, there's competition, but that's why growth is slowing. But just to put it in perspective, so they reported Q3 earnings recently, and that's when the stock kind of tailed off a little bit. But they reported about $1 billion of revenue, and I think what people didn't like is that their revenue is actually going to be flat for Q4. So flat from Q3, this recent quarter, but still $1 billion of revenue. But that represents a 20% increase over Q4 of 20. This is their fiscal year 2021, right? So over last Q4, so their Q4 is actually January of each year. So this would have been January of 2021. Think about that from a perspective. That's when that stock price was peaking at $570, right? Their revenues are going to be 20% higher than it was back then. Like, that's pretty insane to think about, right? Their revenues are 20% higher from when the stock was at $500 a share. And so you got to keep perspective here. Yes, growth is slowing, but if we can flatten out even for a couple years before we start growing, and that's really what they're expecting. They're expecting kind of flat earnings growth for the next few years, even though they're going to continue to grow revenues. And that's really what you want to see. And then we'll have a kind of a plateau to kind of continue to move forward in a real kind of healthy kind of growth rate scenario. And so that's what we really need to focus on. And look, you think about all these stocks that are trading still at 50 to 70 times, these growth stocks, again, technologies you want to be in, you're going to pay 50 times for it. You really are. I mean, these are again, technologies that are changing the game, right? As far as communications go. And with competition, that's kind of why it's getting hit. But what I like about Zoom, is that they have this Zoom developer kind of program where they actually integrate with, say, Microsoft Teams or Salesforce, right? Those are two of their big competitors, in this space. They've got tools that will help them integrate with it. So if a business wants to use Zoom on top of, Microsoft Teams, they can do that through a quick, API, integration. And so, again, that's just more, just more perspective on, this is not going away, right? Just because Microsoft Teams comes out with something new, it doesn't mean that an enterprise is going to shift to using Zoom and move over to Microsoft Teams right away, right? So again, you're going to pay up for a business like this, but I think based on where it's been, based on what else is out there with truly game-changing technologies, I mean, I think 40 times earnings is actually not too bad for a company like this. And again, this is based on the fact that we're going to flatten out earnings and we're going to have a base that we're going to grow from. But from a cash perspective, right? You hear all this stuff out there with all these companies getting killed in the market. It's usually because they don't have earnings and they've got a lot of debt and they can't even grow cash flow, right? They're having a cash burn. This is not the situation with Zoom, right? And this is why I think this is, as soon as the marketplace realizes how strong of a balance sheet this company has and how strong of a cash flow growth company this really is, I mean, there's going to be sentiment and support to drive this stock, I think, even higher. So it's got $5.5 billion of cash on the balance sheet right now, and that grew, quarter over quarter, and they have a 36% free cash flow margin, right? So this is a cash flow generating machine, if you will. And by the way, zero debt. So you think about all these companies that are getting killed, it's usually no earnings, tons of debt, cash burn. This is the opposite of all that, right? Huge cash on their balance sheet, continues to generate significant cash flow on each dollar of revenue, right? And zero debt. So from a stability, that's why it has a safety rating of 9, right? From a stability standpoint, that's where you want to be. You want to be in stocks like this, right? Am I willing to pay 40 times for a stock that's got a game-changing technology, going to continue to grow from even crazy accelerated, pandemic levels, and has, a strong balance sheet? Absolutely. Like why, what else are you looking for, right? So, I mean, I don't want to beat a dead horse here, but this is one of those stocks that I think has gotten thrown out, with the kind of COVID stock bathwater. I really don't think that this stock should be viewed in that way anymore. Yes, it was not worth $500 a share. It's probably not even worth $400 a share. But I do believe that this stock is probably worth somewhere between $275 and $300. Or you could justify a little bit of multiple expansion from there. In fact, the consensus price target right now is still $305, right? So if we're looking at $305 as a consensus price target, that represents about a 68% upside. But even if we don't get to there, and we only get to say, that I kind of showed you that range of where I think this stock could potentially trade. I think my high end of that range was like 275, right? That's even a 50% increase from here, right? So I just think that this is a really good entry point longer term. Could there be more downside? Maybe. But I think it's really more about the sentiment shift and people realizing how good of a business this really is. And, just getting them to move forward from this COVID mindset. And I think that's coming. I really do think that's coming because, again, this stock and company has kind of changed the way people work and interact and engage. And so that's the type of stock I want to be in with a strong balance sheet. I think that's where we're at. So let me just quickly, if you're concerned, again, I think this is a buy at this price, around the low 180s. Even if it dips below that, I think it's, again, a pretty strong price. If you did want to write a cash secured put, I'm totally supportive of that. I think it's if I love buying the stock, I always love selling the put as well. You can do both. You can buy a little bit of the stock here. You can sell the put if you want to as well. I don't even know if I'd necessarily go down into our strike zone at this point. I mean, the strike zone's 20% below, and that's really based on the fact that how volatile it's been recently, and it's just kind of taken into account that volatility. So. But look, at the 145, which is just probably an insane price at this point. I'm just looking at these stocks that have deltas under, say, 25, or these options that have deltas under 25. So this is the January monthly option. It's got 49 days left. I would be comfortable really anywhere in this 145 to 160 level. I mean, think of that. 160 is $20 below. I mean, I might even go higher than that, with a stock like this. Again, I would buy a little bit of stock here, maybe just, juice your income and maybe give yourself a little bit of margin of safety to add if it drops any further. But look, this thing produces a 3.2% average monthly yield with a 25 delta, right? It gives you 13% margin of safety from this current price that's already down 60% from its peak, right? And then, if you went all the way down here conservatively, I mean, this is even... this is a 2.1% average monthly yield, way down at 145, a 20% margin of safety, and a 16 delta, right? So these are very, very attractive cash secured puts. What's the reason why these are even being offered in the market is because of this fear. There's this fear that these COVID stocks are going to continue to fall, but I think this one's been wrongly classified at this level, right? At $500, yes, classify it as a ridiculous priced COVID stock. But now we're down to a level where it's like, hey, there's a real business here, a strong business, and I really like it at this level, and I think it can move forward from here. So it's one of our top picks for 2022. buy some stock here. I think it's a good level, or sell some puts. I think the puts have really attractive risk reward. Any questions, let me know. Take care.